Welcome back. I'm Pratap here. Today is the 20th January 2024. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action course. You can access all the training videos at our YouTube channel. So there you click on the home page and scroll down to the playlist supply demand zone price action course. So in this playlist all the training videos are available. Click on this playlist here and scroll down to the bottom of this playlist. Here starting from lesson 1.1 in an order, all the training videos are available. And until the most recent lesson, you will be able to access. Even the upcoming videos also will be placed in this playlist. So please make use of this opportunity and strengthen your skills related to supply demand zone price action course. I'm also providing the links to all these training videos at our Telegram channel. I'm also providing the link to the Telegram channel in this YouTube video description. And even the link to this playlist also available in this YouTube video description. By clicking the link, directly you can get into these training lessons. So please make use of this opportunity and strengthen your skills. Now let us get into our analysis discussion. Let us analyze the high liquidity zones generated in our NeoStock software in our yesterday's report. Yesterday we have identified 6 high liquidity zones from daily time frame and 75 minutes time frame. Let us look into the stocks one by one. The first one is Dixon, and this is the fine-tuned area, and today prices did not enter into this zone. We did not get the trade. And the second one is Ashok Leyland. Ashok Leyland we got a trade. Even yesterday also we got the trade. Ashok Leyland we fine-tuned. We have identified a 5 minutes high liquidity zone. So inside we have a 75 minute zone. Inside the 75 minute zone we fine-tuned to 15 minutes. Inside the 15 minutes again we fine-tuned to the 5 minutes. That is what you have seen yesterday. Yesterday we discussed about this stock in detail. Here we identified a 5 minutes high liquidity zone. And further, if you look into this stock at 1 minute level, this is the point we didn't focus on in our yesterday. The real order flow is there in the 1 minute area. We have a rally candle, base candle, and the drop candle. See here, the entire order flow is started from this area, the 1 minute area. Further, even yesterday also, we got the trade from this 1 minute area. And take an entry at the 1 minute area will give you better reward. Because there the actual order flow is there. So instead of 5 minutes entry, we can see yesterday also prices entered into this area. Because this is a high liquidity zone which supports multiple tests. Even today also it provided a successful trade. Ashok Leyland has given a profit 5,750 rupees, which is a 3.1% ROI. So almost half of our average ROI during the intraday. 6.1 is our average. Excuse me. But anyway, during the last during the last hour of the trading day, getting 3.1 is not a very bad. It's a very good target. And next one is Glenmark. This is again a daily high liquidity zone. And prices did not enter. And moreover, I haven't fine-tuned fully. The reason is these zones will be, most likely it will be violated, especially this is the one. Let me show you. At 75 minutes fine-tuned, drop, base, drop. If you look into 15 minutes area, we have a rally candle, 4 base candles and a drop candle. And look into the 5 minutes area. See the number of the base candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Easily this zone will be violated. That's why we can't expect a trade in this zone. And yesterday only we discussed. I mean, not yesterday, today morning, I released the video about the zone confluence. I hope you might have gone through the zone confluence video. It's a very important video. In the zone confluence, one of the scenario is about how we can identify when a zone will be violated. Even though I explained when a zone will be violated in different videos earlier in the analysis part, but with clear examples I have explained in the training video. Using a PowerPoint presentation with clear examples. And this is the live example for that particular whatever explanation I have given in our today's training lesson. Lesson 16, zone confluence. If you did not listen the video, please go through it. It's a very important video. Lesson 16. And the one above we have already fine-tuned. This one is not a valid zone, but this one we can plan. Here the real order flow is there. Probably this will act as a 5-minute high liquidity zone. Maybe next time, because here we have a huge order flow is there in this area. See here, see the order flow here. This is a drop, not a very great leg out, but okay, 5 minutes level. See how the rejections are coming from this area. This is only an indication at first level indication. It could be a high liquidity, 5 minutes high liquidity zone. See, finding the high liquidity zone, the algorithm is very complicated. I already give you a clue, at least 80% level, we may guess this could be a high liquidity. But software algorithm point of view, it is very strict. It's not only just based on the number of tests. There are so many other factors. The software, it is a complicated algorithm. It identifies the S underscore DZ and R underscore SZ. This is just only 80% level. Sometimes our assumptions may fail also. That's why we should be very careful. But the risk, because the risk is we minimize it at the least level, there is nothing wrong in taking a trade next time when prices are entering into this area. Because we are seeing a real order flow, because see, prices are unable to move beyond this. That means there could be a very strong order flow in this area. So next time when prices enters, maybe you can plan a trade in the landmark. But remember, if the stock should be listed in the stocks near supply zones, at the time only you have to plan the trade. Otherwise, you should not plan. Because volatility conditions on the present day plays the major role in the next day. Stocks near demand and supply zones, software algorithm is not displaying just like that. It calculates the entire volatility conditions within that particular stock. And then it decides whether it should be listed in the stocks near demand and supply zone list or not. And the next one is Conquer. This is the one we got a stopped out to trade. This is a 75 minutes high liquidity zone. We have a drop, 2 base candles and a drop. And this is stopped out. The structure is good. The structure of the zone is good. This is a 75 minute zone. Let me show you the 15 minutes first. See here we have a drop base and a drop with a pro gap. After that, we got a rejection from this zone, from the 75 minute zone. Prices did not enter up to this fine-tuned area, but it went up to 15 minutes area. So 15 minute zone is tested, but 5 minutes area where we have the real order flow is not tested. Let me show you in the 5 minutes time frame. Let me go to the 5 minutes. The 5 minute zone is not tested. Prices did not end. Here we have the real order flow might be there. So that's why we can take a trade here. But that didn't happen. So it is stopped out. 15 minutes area is tested and gave a good. Probably the order flow might have been here more rather than there. Or today, maybe the demand is very strong. See here, institutions created a new zone. We have a drop, 2 base candles and a rally. They increased the demand. They decided to break this zone. And finally, okay, anyway, we have to accept there is no enough order to resist this existing demand. So Conquer has given a loss 1,100 rupees as per one future slot. And the ROI, negative ROI is 0.7%, minus 0.7%. That is the ROI. So this is one stopped out trade from today. And next one is Grasim. It is again a 75 minutes zone, supply zone. Prices did not enter into this area. We didn't get the trade. Next one is UBL. We got a successful trade in UBL. UBL is also a 75 minute zone. Exactly it entered into the zone. See how it reached. But finding the target is very tricky. I'll explain how we got the maximum target. First look into the zone. This is a drop, 1, 2, 3, 4 base candles and again a drop candle. And inside we identified a 15 minute zone. Sorry, this is 75 minutes. So 15 minutes we have a rally candle. Why rally candle? Add the already it looks like a rally, but you add the hidden body. So it's a rally candle, base candle, and a drop candle. That's why rally, because it is a rally candle. For the higher wick, you need to draw. This is the 15 minute zone. Inside the 15 minutes zone, we identified the real order flow at the 5 minutes area. So that's why exactly prices entered into that real order flow here today. See here. So what is the 5 minute zone? Go to the 5 minutes time frame. So here we have a drop candle, base candle, and again a drop candle. After that, follow through candles. There's a huge move down. And moreover, see here, this is a drop, 3 base candles, and a rally candle. This is a rally candle with a hidden body. This entire demand zone is violated. That way it got the zone achievement. The supply zone got a very good zone achievement. It is inside the high liquidity 75 minutes area. That 75 minutes is inside the 15 minutes area. The 15 minutes is inside the 5 minutes area. This is the way we identified the real order flow. This is how the zone confluence, the fine-tuning strategy, what I explained in today's training video. This is a classic example, how we are fine-tuning the zone by using the concept of zone confluence. Especially the fine-tuning concept should tell we have to go step by step. We should not jump from one time frame to another time frame. You have to identify one time frame, that is our high liquidity zone time frame. From there, one time frame below we are going, that is 75 minutes. From there we are going again one more time frame below, that is 5 minute zones. This is the way you need to fine tune. This kind of fine tuning strategy identifies the real order flows. See, every 5 minute zone is not a tradable zone. Every 15 minute zone is not a tradable zone. The zone should be there in the higher time frame zone. That higher time frame zone should be there in some other higher time frame zone. Some other means its higher time frame. I am using the general English word, higher time frame. A time frame above our time frame. What I mean. So that way we are fine tuning to the lower time frame levels. From one time frame to the next time frame. From next time frame to again further next time frame. That way we are fine tuning. This fine tuning strategy is based on the zone confluence. This is a very powerful strategy. That's why we have seen so much of success rate for this strategy especially in high liquidity zones. So this is another classic example. Every day you are seeing these kind of examples, but this is also. See why prices are exactly from here it is getting the rejections and prices are falling down. Because as per the fine tuning strategy based on zone confluence, we are able to do this. That is what I explained in today's training lesson 16. Okay. And what about the target? The 15 minutes target is not very clear. Here drop, see this is like ERC candle. Definitely this is not the base candle. But see here from here a rally candle. So definitely you cannot draw a zone, but you can expect a zone in the lower time frame. Time being assumed this is a 15-minute zone, but not really a valid zone. But inside this you may find the real origin, the order flow. So that's why what I did, I went to the 15 minutes time frame. Here you identified a drop candle, base candle and a rally candle. In drop base rally, what you have to do, digital line, uh, among these three candles, whichever is having the low, that should be the digital line. Actually, you should not draw the zone like this. You have to draw the zone like this. I already explained how to draw the zones in the patterns, in the zone patterns training lesson. Maybe it is lesson 4 or 5 or 6 if I am not wrong. So prices reached exactly here, and this is the way UBL has given 12,440 rupees profit, which is 9.5% return. And one more thing you have to observe, this is the first entry we got. If you missed the next candle also we got the entry, but say at 130 candle we got the entry, and 150 candle we got the exit. So within half an hour the trade is completed. In just half an hour. So UBL is a very good successful trade in today's trading session. So these are the high liquidity zones what we generated from our yesterday's report. Now let us generate demand and supply zones as per today's data. So let us generate demand and supply zones for all the time frames starting from yearly. So entry time frame is yearly. Let us find the stocks near yearly demand zone. No stocks are there. Yearly time frame, let us try to find the stocks near yearly supply zone. Here also no stocks. Let us change the time frame to half yearly. Let us find the stocks near half yearly demand zone. No stocks. For half yearly time frame, let us find the stocks near half yearly supply zone. Here also no stocks. Now let us change the time frame to quarterly and let us find the stocks near quarterly demand zone. So two stocks are filtered which are near to the quarterly demand zone. So you have to pause the video and you have to analyze the stocks because I have to quickly go through. So every time you pause the video. After you study, then you can proceed further. So let me go back, quarterly time frame. Let us find the stocks near quarterly supply zone. Only one stock is filtered. So let me go back. Let me change the time frame to monthly. Let us find the stocks near monthly demand zone. 4 stocks are filtered near to the monthly demand zone. So let me go back. Monthly time frame, let us find the stocks near monthly supply zone. No stocks are there. Let's go back. Let us change the time frame to weekly. Let us find the stocks near weekly demand zone. So these three are near weekly demand zone. So let me go back. For weekly time frame, let us find the stocks near weekly supply zone. 6 stocks are near to the weekly supply zone. Let me go back. Let me change the time frame to daily time frame. Entry time frame is daily. Let us find the stocks near daily demand zone. 9 stocks are filtered. Let us look for the high liquidity demand zones. No high liquidity demand zones from today's list. Okay, that means we didn't find any high liquidity daily demand zones. Let's go back. For entry time frame daily, let us find the stocks near daily supply zone. 7 stocks are filtered. Now let us try to find the high liquidity supply zones. The first one is Nifty Media is a indices. High liquidity supply zones. So here we found Ambuja Cement is a high liquidity supply zone, already tested once. So you need to look for a fresh 75, look for a 75, inside you need to look for fresh 15 or 5-minute zones. Next one, PNB. PNB is a high liquidity zone, is a fresh zone. Check the quality of the zone. So we have 2 high liquidity zones. One is Ambuja Cement, another one is Punjab National Bank. These 2 are high liquidity daily supply zones. Now let's go back. Change the time frame to 125 minutes. Let us find the stocks near 125 minutes demand zone. So these 10 stocks are filtered. Let's go back. For 125 minutes time frame, let's find the stocks near 125 minutes supply zone. These 7 stocks are filtered. So let's go back. Let us change the time frame to 75 minutes. So entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. So these 8 stocks are filtered. Let us find the high liquidity 75 minutes demand zones. So we have Dixon, still it is valid. Yesterday also we got the fresh zone. Next one is we got Godrej CP. This is a fresh zone. So check the quality of the zone. We have Muthoot Finance. This is also a fresh zone. Check the quality of the zone. If the quality is good, mostly this is going to be a successful trade. Prices enter into the zone. So let's go back. We have identified three high liquidity zones. High liquidity, 75 minutes demand zones. Let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. So 8 stocks are filtered. Let us find any high liquidity supply zones are there, 75 minutes. So we have one stock, Bank of Baroda. Already one rejection is there. That means in 15 minutes time frame, probably it might have tested one zone. So we have only one high liquidity zone we identified, 75 minutes time frame. So now let's go back. Let us change the time frame to 25 minutes. Let us find the stocks near 25 minutes demand zone. These 4 stocks are filtered. Let me go back. 25 minutes time frame. Let us find the stocks near 25 minutes supply zone. These 8 stocks are filtered. Let me go back. Let us change the time frame to 15 minutes. Let us find the stocks near 15 minutes demand zone. These 4 stocks are filtered. Let's go back. 15 minutes time frame. Let us find the stocks near 15 minutes supply zone. These 4 stocks are filtered. Let's go back. Let us change the time frame to 5 minutes. Let us find the stocks near 5 minutes demand zone. These 8 stocks are filtered. Let me go back for 5 minutes time frame. Let us find the stocks near 5 minutes supply zone. These 11 stocks are filtered. So this is about stocks near demand and supply zones for all the time frames starting from yearly until 5 minutes. I hope this information is useful to you for your further analysis. So let us all meet again in our next video. Thank you.